Welcome to RANsquawk's e-morning briefing for Monday the 2nd of November 2009. Just gone through 9:30 now in London, so a quick review of the weekend's press and what we've seen so far. Starting off with China, we've had some pretty positive data overnight in terms of the Chinese PMI. It did rise from 18-month high for October, coming in at 55.4 from 55, pointing to some sustained strength in the country's vast manufacturing sector. Separate to that as well, some conclusion to a lot of the speculation at the end of last week. Indeed, we have seen CIT Group file for bankruptcy on Sunday as the global credit crisis left it unable to fund itself and the recession left it with too many bad loans. But again, the market reaction to that somewhat subdued, and as it was pretty much expected to be announced on Sunday. We'll see how the US reacts to that, and no doubt we'll get some further commentary when the US session opens up later. Elsewhere in foreign exchange markets, overnight saw the Australian government up its economic fiscal outlook. GDP now seen at 1.5% for the 2009-2010 period and plus 2.75% for 2010-2011. The Aussie dollar is trading higher at the moment, pretty much in tandem though with a generally weaker dollar. The dollar index is down over 0.25% as we speak, aiding some of those commodity-related currencies. Taking a look in WTI crude futures as well, we're trading higher there, around 60 cents up on the session. Couple of stories underpinning in terms of fundamental news. Mexico's three main crude oil exporting ports in the Gulf of Mexico remained shut on Sunday due to bad weather. The three ports handle nearly 97% of Mexico's oil exports, according to the Transportation Ministry. Elsewhere, in terms of UK news, much of the focus obviously is onto the Bank of England rate decision we'll have on Thursday, and if indeed whether the Bank of England will extend that QE programme beyond the already bought $175 billion. Most now anticipating, analyst consensus has gone to 50 billion from what was on Friday just 25 billion. In particular, some attention to David Smith, closely followed economist, writing in the Sunday Times that the bank should prime the pump for another £30 billion. Elsewhere as well, Gordon Brown is planning a final spending spree to help the economy out of the recession and put pressure on the Conservatives over their plans for deep cuts. The PM keen to use the autumn pre-budget statement to announce a new fiscal stimulus with billions of pounds of extra money for housing, infrastructure projects and training. Separate to that as well, some attention to Deloitte's article by Roger Bootle, who said that UK government spending of 2% a year will be needed until at least 2014. That's cuts in UK government spending of 2%. Elsewhere in equities, much of the weekend's press was dominated by the majority-owned banks RBS and Lloyds Banking Group. For RBS, Darling is preparing to plough billions more of taxpayers' money into the bank to take the government stake to 84% from the current 70%. The Treasury announcement this week will confirm that RBS is signing up to a controversial deal to pump £270 billion of Podmatic loans into a state bank insurance scheme. As part of the deal, the government will pour up to £19 billion of additional capital into RBS by taking up the issue of B shares. We did see an update from RBS in a statement pre-market today that said they are close to finalising talks with the HM Treasury. Separately for Lloyds Banking Group, on Tuesday, reports suggest that they'll announce they've managed to escape the government protection scheme. It will involve a £14 billion rights issue and a £7 billion debt swap. In addition, £5 billion will be raised from disposals, including Cheltenham and Gloucester, Intelligent Finance Internet Bank and some Scottish branches, which are touted that Santander in Spain could purchase. Also, from the Sunday Telegraph, they put a front page story in regards to Darling could confirm in the next few days that RBS and Lloyds could be split up, the article suggesting various asset sales and the creation of three new high street banks. Elsewhere, in terms of other notable movers, we've seen Cadbury's trading slightly higher after Kraft is putting the finishing touches to a £10.5 billion hostile bid for Cadbury's to be tabled within the next 10 days, according to press speculation. Whether that amount of £10.5 billion is seen still by analysts as somewhat shy of what executives and shareholders of Cadbury's will be looking for. And so just take a look on how we fared so far today. It's been very much a case of the PMIs in the Eurozone, which have all come out largely better than expected. In particular, that's following on the coattails of the 18-month high we had in China overnight. This helped lift European UK stock futures, who are currently up around 0.5% in the FTSE CAC and DAX, being led predominantly by the knock-on effects in the manufacturing demand. So WTI has also traded higher, as too as spot gold, currently up around 7 cents at 1,053 last. So oil and gas basic materials are outperforming in the Eurozone. Elsewhere then, taking a look in terms of the pound in the currencies, that's come under a bit of pressure. We're down around 100 pips in early trade, but we're finding some support around bids at 163.50. Obviously, we've had quite a lot of speculation about further QE this week. We've had that news in RBS and the government potentially taking larger stakes as part of that asset protection scheme, which has seen their shares trade down as much as 12% at the open. That's all weighed on the pound today, as well as the ex-MPC member Blanchflower being his usual pretty downbeat self on the economy has also weighed. In terms of the calendar then, looking forwards, there's no 1:30s with the US, bearing in mind their clock change, so the time difference between us and New York now back to 5 hours. So we'll be eyeing at 3 o'clock London, 9 in Chicago, the US ISM manufacturing report, and then we'll also see pending home sales and construction spending at the same time. And then this afternoon we'll be looking out for any commentary from Feds Torillo and Obama. And in terms of US corporate earnings, today will include Ford Motor, Cisco, that's Cisco with an S, Anadarko Petroleum and Chesapeake Energy.